You also write in the note that you've been tracking how Warsh's sentiment has changed since his time as a Fed governor during the great financial crisis, 2006 to 2011, I believe. What did you find?
Well, good to be with you. I found what you'd expect, which is he's been hawkish throughout his entire public career up until about 6 months during which he's been interviewing for the Fed job. For a president who calls himself a low interest rate person. Shocking, I know.
Isn't it like kind of baffling? I think when the name was announced, Neil, I was kind of like, wait, did I miss something? Like, so what do you think's going on here? Or do you feel like, it's interesting, was it Gavin Newsom who did a big interview with our Brad Stone and just said, kind of the rule of law is in a part his view in terms of this presidency, but he said one of the things the president does pay attention to is financial markets. And do you think that was kind of in his thinking when he said, I got to put a Fed chair in that the markets respect?
Yeah, I don't know. I don't know how to think about that. I mean, I think the upshot to all this is that the Fed is bigger than any one person, right? It's an institution with lots of people. It's an institution that's driven by consensus building, and there are a lot of people on the FOMC that rotate in and out from the regional Fed banks, and they're no slouches. Like someone like Lori Logan or Beth Hammack. Their expertise, I think, is considerably stronger in lots of places than Kevin Warsh. So I don't think they're going to be intimidated by Kevin Warsh sitting around that table. So I think the upshot here is that the Fed is bigger than any one person, and that probably limits a lot of the sort of anxiety that you might get to markets. I mean, the real test of all of these positions, in my opinion, is really in times of crisis. Not so much when things are normal.
So we're going to get to crisis in just a second, but first I'm wondering if we're putting the cart before the horse at this point because of what we've heard from Senator Thom Tillis and the fact that he will not back a nominee until the probes into Jay Powell are settled. What does that mean for the outlook?
Well, typically when you have the sort of changing of the guard, if you will, it takes about 90 days from the time the person is nominated by the president to when they're confirmed by the Senate. We'll see how long this one goes. Typically the hearing is scheduled before the committee is scheduled about a month after the person is nominated. Now, if Senator Tillis decides to kind of stick to his guns, he's got nothing to lose. He's not up for a re-election. We'll see. I think as is the case with any nominee, the longer it's like a fish out of water, right? I mean, what happens if a fish is out of water long enough? It starts to smell. And so I think that's the risk I think you run if both sides kind of hunker down. I mean, the president has basically said, let it go on for as long as it needs to, but to get Tillis to back down, the president will need to back down from the investigation.
Hey, I do wonder what a Warsh Fed will be like, Neil, having seen, like you, lots of different Fed chairs. And I remember a time where I feel like you didn't really hear from a lot of Fed speakers, and now it's just such the norm. Is he going to be a quieter Fed chairman so that we're not going to be able to pick up cues and speeches that he's going to be giving potentially if, again, he is indeed Fed chair, the next Fed chair?
Yeah, I think that's been one of his sort of critiques of the Fed is that they talk too much.
Do you agree?
Sometimes yes, I do. I think that there's something to be said for that, but there's also, like with everything, there's a lot of incongruencies in what he's talking about, right? So, during his time as a governor, I don't really recall any meaningful speeches that Warsh gave on the economic and policy outlook. And he probably looked at that as a sort of form of forward guidance that he didn't really believe in. But he kind of is all about use less discretion in terms of policy, right? We should have more of a rules-based framework. But I think what's interesting about that now is a lot of what he's talking about in terms of, trying to get rates down, at least up front, is an appeal to discretion. Like, how else would you describe the sort of golden age, right? The thesis that they have to kind of bring rates down, right? Like, we're in an economic golden age. It's a productivity boom. Nehru's low. We can cut rates. without stoking inflation. Obviously, that's an appeal to discretion at some level. So you're actually going to need a lot of data to convince the people around the table to kind of buy into that theory. You can't just will it into the Fed's policy. The other thing I would say, he's also a big critic of forward guidance. Now, one of the things we know about forward guidance, right? This is, basically guidance on interest rates.
Right.
Is that helps move, so that basically allows like movements in the front end of the yield curve to translate more into the back end of the yield curve, right? Because the markets anticipate what will come as a result of what the Fed's doing now. If you get away from forward guidance, that kind of goes away and it pushes up term premiums, which all else equal makes longer term interest rates higher, which is something they've said they want to get down. One of Warsh's big criticisms back in 2024 was that the Fed wasn't able to get the entire curve down in 2024, even though they cut interest rates. I think what that misses is the fact that longer term rates fell into the cut. Right?
Yeah.
Had they not had forward guidance, that wouldn't have happened, in which case they may have had to cut even more. So look, I mean, there's a lot of like interesting little nuances that we can talk about for hours, frankly.
Well, one nuance I want to ask you, and maybe it isn't just a nuance, but I do wonder about the connection with Stanley Druckenmiller. We talked about this with our Eric Schatzker, and the ties that he has, famed investor, well known on Wall Street, certainly to the Bloomberg audience, to you, that he has ties to Bessent, the Treasury Secretary, right, Scott Bessent, as well as to Kevin Warsh. I think the FT even talked about, the Financial Times, about the rise of the shadow Fed chair, meaning Druckenmiller. Just got about 30 seconds. Is that maybe something that could be a reality very quickly?
I mean, I don't know. I think a lot of this sort of enthusiasm for a Treasury Fedicor is quite misplaced.
Okay.
I'm not sure I buy into that. Again, that goes back to this issue around QE. Like, why did the Fed have QE? Did they do it to bail out the federal government, or did they do it because the federal government wasn't doing anything? I mean, that if you go back to that time, Carol, we were talking about how the government was doing a sequester and austerity, and I think that kind of gets the causality around policy backward.